Hello, everyone. Welcome to another episode of Squord Academy. It's been a long week. It's been one hell of a week. I was just talking to it. It's kind of like I've been out of town the whole week. As you can probably tell, I'm in a hotel right now, but Squad Academy must keep going on. We're gonna get this going. I promise you guys, and we'll be here back in next week. But Edosa, my brother, how are you doing?
I'm not doing okay, you know. I feel offended. He's calling me my brother, but he didn't invite me for this vacation. As you can see in the background, he's in a luxurious hotel. This was only 5 star, this is 7 star. Room reserved for like squad executives.
Good executive, right?
And
Yeah.
he's calling me saying, let's do podcast. So I'm quite offended, on this Saturday. And I hope like our listeners can, find a solution for this problem.
No, I'll invite you next time. I already know what the answer will be. You give me some excuse anyways. You give me some excuse anyways. But no worries. But good to hear you're doing okay, man. Good to hear you're doing okay. But yeah, a lot has happened. I won't say a lot, but some really interesting things happened this week. And I feel like we say this every week, but
Yeah.
this week was probably things that happened this week are probably things that necessarily didn't directly happen within the startup space, but will actually heavily impact the Nigerian startup ecosystem over the next couple of years. But what am I trying to talk about? So we have a few topics, right? First one being the Naira float. So the Nigerian government announced this week that they'll be removing the peg that they had on the dollar, and the Nigerian currency, which is the Naira, will be floated. Then we'll be talking about two startups that are currently raising funds, Eze and Temi. Then we'll round up with the student loan bill that was signed into law, enabling Nigerian citizens to get I believe it's zero interest student loans to attend universities or just schools in general. So we'll round up with that. But without any further ado, let's just get right into it. So the first thing that happened this week was Naira float. And funny enough, I got a bunch of questions this week. I was trying to talk about this online, and apparently a lot of people don't even know what the Naira float is. So to just like even like educate, just shed some more light on what it means to float a currency. Um, it pretty much means when you let the market determine the value of your currency, right? So the way the Nigerian economy has worked for years is that with the Central Bank of Nigeria, which is the CBN, has had the dollar pegged to a certain value, and the last value that I had in mind was about 462 naira. For those who live in Nigeria, you only know that you have the black market rate, which is also known as the parallel market, and the CBN rate, right? So the CBN rate was $462, and the black market rate was always varied, right? I mean, it was always that was the more volatile one. But last that we checked before the peg was removed was about $770, give or take, right? So what's happened now is the CBN, like I said, have removed the peg that they had in dollar, which used to cost Nigeria a lot in forex and in pretty much in forex, right? But now that peg has been removed, meaning that there's only going to be a unified rate moving forward, right? There's not going to be any peg anymore. So the Nigerian government is not going to let the market decide what the dollar rates will be. And you know, the funny thing about the market is the market always wins. It always wins. And this was bound to happen, right? I mean, it's something I've been clamoring for years, just knowing how much in forex and foreign reserves that the peg costs the Nigerian government, it was bound to happen. Now, in the short term, there might be some pain, in the sense that there are some incentives that the CBN used to give, right? I mean, with that $462 rate. For those who school abroad, they'll probably know about the tuition fees, right? That they used to get at that $462 rate. That's something that will now be gone. Although in recent years, a lot of people have had to get the dollars from the black market, even for tuition. So to many people, it's like, we don't care anyways. We don't care anyways. We've not been able to access that dollar at that rate anyways. But the tuition was one thing. Even international trips and stipends. Funny enough, the CBN actually gives you, I think it's about a limit of $2,000 per traveler. If you're traveling abroad, you actually get the CBN can actually give you a stipend of $2,000 at that CBN rate. So that's something that'll be gone now, and you have to get at the actual market rate. Another thing is as well is for businesses, importers and exporters. I mean, those who actually conduct businesses that further aid the Nigerian government through taxes or whatever. The CBN has some programs that give you dollar at that used to give you dollar at that CBN rate. Now that incentive will be gone as well. So there's some of these incentives or so this incentive that'll be gone in the short term. It might cause some pain to certain people in the economy, but kind of like I said, right? Recently, it seems more like most people have had to fetch or get the forex and dollars from the black market rate. And just go through some numbers, about 80% of Nigerians already patronize, like I said, that dollars from the black market at about $775. So $775 naira and per dollar. So there's not so a lot of analysts are not expecting this pain to be that significant in the short term, right? Due to that stat. But having said all this, I mean, and before I get into how this could impact the startup ecosystem, both positively and on the other side as well. We can also talk about some other things. So the first thing I want to even point out for those who want to go ahead and now moving forward know what the rate is. There's actually the I&E window that would actually now have the actual naira to dollar rate. And for I&E actually stands for investor and exporters window, right? So that's what will now have the official rates moving forward if you want to track that. But I think this is, like I said, this is something that has been bound to happen for years. And I'm actually I don't want to jump the gun and start speaking about this, but I'm actually kind of impressed that some of these changes have been enacted this quickly into the new regime, if I'm being honest, if I speak plainly. Because there are many things that was seen for years that the Nigerian government has been missing on. The fact that the foreign reserves has been low on dollar and only certain institutions or organizations have had access to that lower dollar rate, the CBN rate, has really affected the economy. For example, we know that remittance is a big part of the Nigerian economy, right? I think as of 2021 or so, the remittance to Nigeria was about $20 billion. That's almost our GDP, right? I mean, that's about 70 or 80% of our GDP, right? So it gives you a context of how much we actually remit to the country. But guess what? A lot of these remittance doesn't go through the actual banks or the CBN, right? Because a lot of this goes through other channels, whether it's the World Remit or these other fintech platforms, or even just black markets, Mala Mala, Musa Musa, that kind of vibe, right? So like a lot of this doesn't actually go through the banks or the CBN, right? So the government is missing out on this forex, which is why we keep having a problem with depleting foreign reserves, right? So moving forward, like I said, folks will not be incentivized to go through the black market or the parallel market because there's only going to be one rate moving forward. So you're pretty much better off just going with the actual banks, right? Provided now the only problem in the short term is there might be a supply issue in the short term, right? Because it's going to take some time. Like I said, there's going to be some pain. It's going to take some time for the Nigerian, for Nigeria to get the dollar supply because this is just being rolled out, right? So there's going to be some skepticism in the economy. Oh, a lot of people are going to be playing on the safe side. Let me wait to see what happen. Let me wait to see what happen. This always happens, right? But over time, things will stabilize. There's going to be more trust. I mean, trust in government is another thing, but there's going to be more trust in the government, and people will feel more safe just using those channels. And over time, you now see more people just go through the banks and other channels, right? So, like I said, right now, this is how the banks and the CBI will now get more of this dollar supply into that they've missed now for years, right? Because when you look at over the past year or so, FDI was about $240 million, and FBI was about $1.2 billion. So those numbers are actually quite alarming, right? Just seeing how investors have kind of shied away from the Nigerian economy. So these are things that needed to be addressed. And this law, although could be painful in the short term, will actually help us in the long term, right? So one more thing before we dive into impact on the startup ecosystem. For those, just even reference the fact that the actually other economies that have done this in recent years, right? I think you and I were talking about this last year, so
yeah, with Egypt also.
Egypt, yeah. So Egypt in 2016 or so, right? Rolled out and also floated the currency, right? But prior to, and just to provide more context, prior to floating the currency, because there's also some kind of inflationary concerns, right? With floating your currency, right? And that will probably happen in Nigeria. But let me not digress. They floated the currency in 2016. Prior to that, inflation was 10%. By 2017, after floating the currency, inflation rose up to 34%. And by 2019, the inflation had dropped to 5%, right? So it just shows you how it works, right? At the end of the day, once you let market determine what the value for your currency is, it gives you more visibility, it gives you more understanding of where you actually sit as a nation and what you need to address, right? So, like I said, it's going to be a journey. It's going to be a painful one. And this is just starting. So I think people need to just brace and just buckle up for what this is going to be. But I think in the long term, it's going to help. At the same time, we're actually going to get the aid that we need now. Don't forget, when Egypt first floated the currency, it was painful. But at the end of the day, you had financial institutions like the IMF who actually provided loans to Egypt to help stabilize the economy. This is something that we have been clamoring for years, and the IMF has pushed back from supporting us because they've always wanted us to float our currency. I think there was someone I was talking about this, but the IMF already promised, I think, about $2 or $3 billion in low interest loans to aid the Nigerian government if we float our currency, right? So these are all programs and initiatives that will now be made available to us just with this move. But I just saw that to just say, this has happened. It was bound to happen. So let's just buckle up for the journey ahead. Now, finally, moving to the impact on the startup ecosystem. Fintech. We already know this is going to be hit, right? And I'll pass it on to you because I know this is your main area of expertise. But just one thing, I know fintech is going to be hit because a lot of startups that have primarily focused on cross-border payments, this is that, right? There will be they'll besides and I struggle to see how they're going to. I think there are ways that they can still benefit from this because at the end of the day, they've always had the know-how. They've been in this space for years, so they understand the ins and outs of what it takes to provide this kind of services, right? So I think there are ways they can benefit from this, but at the same time, there are also ways that they could be made irrelevant moving forward, because, like I said, a lot of them used to capitalize on that arbitrage that they had from dollar to naira, naira to dollar, buying and selling. But that will be no more now because there's only one rate, right? There's no CBN rate, and like there's just only one rate moving forward. So I think fintech will be heavily impacted. I think there's going to be room for a lot of consolidation, a lot of M&As, maybe banks with fintechs, acquiring technology, whatever it is. But a lot of these fintechs will have to justify what their main selling points will be moving forward. But I'm pass it on to you, because I know I've been going for a while. What's your take on this?
Well, thank you very much. I mean, you highlighted all the points that were raised. And just to briefly brush over what you said again about the policy, it's very funny, you know, the I&E window was actually always there, and CBN was like by the side, almost guaranteeing that they will support the rates on that window. So let's say CBN says the rate we like is 460. So everybody that was trading in the I&E window, that's investors and exporters, those are the people that had access to it before, they knew that the rate wouldn't go more than that 460. So it used to go to 461, 462, but they knew that CBN has already positioned or postured that they're defending that rate. that they'll keep buying it. So that's why the market was technically always a market of people can buy and sell, but they always knew that there was a big man buyer, that's CBN, that would make sure that the price doesn't go below certain rates. So imagine buying Amazon stock, knowing that Bezos said that, look, I promise you the price won't go below 320. So it's a market, you're buying and selling, but everybody's buying with confidence that Bezos will do all he can to keep the price at a particular floor. So that's what the I&E window was. And because of that, obviously, it was very slow. So imagine being a fund manager in the US, you have $100 million, you want to put it in Nigeria, you convert it, you do that, you buy stocks in Nigeria with Naira. When you now time to sell, you want to exit. So you sold your stocks, you now have Naira in your Nigerian bank accounts. You say, okay, how far? I&E window. I want to sell this Naira for $1. And it's taking you like 1 year to get it out of the country. You're very angry. But you want to do that because you want to get it at 460, not the black market rates, because that will give you a loss when you convert it back. So that was the situation. And it was very frustrating. And it was an obvious arbitrage. Because some people that were fortunate enough to access 460 would turn around and go back and sell it in the markets for 760. Easy 300 Naira profits. Think of it like somebody guaranteeing that, let's say MacBook is $2,000. The person is telling you, no, I will make sure you can afford it for $1,000. So bring your $1,000 to me. I'll give you MacBook for $1,000 instead of $2,000. So you quickly pay him $1,000, collect the MacBook, go back to the market, sell it for $2,000. You make your 1K profits. You may even do it twice, 3 times, and you now have enough money to buy a MacBook proper and keep going. So that was the situation, right? And now CBN is essentially just saying, look, we're not supporting it again. Basically meaning we're not spending dollar recklessly again. We're not, if the price goes to 470, 700, 600, we won't intervene. We will be a neutral party, just looking at it like everybody else. So that's what CBN is now saying. And that's why the price literally fell down from 400 to 665. I think now it's like 700 and something. In the I&E window. Now in the black markets, in the streets where people wanted it fast, could always get it fast, it's still like 770, 780. Hopefully, the logic is that those two rates, the I&E and black markets, will end up finding an equilibrium, finding the same, because essentially they are meant to not be the same thing, because you're saying, look, this place is meant to be easy to get, this place is meant to be easy to get. So hopefully they will now harmonize at a rate. That is beautiful. And we hope CBN maintains that posture, because we know somebody brought out an article in 2017 that CBN said this exact same words that we're floating in error. So we just hope that it's not some backtracking, because investors will be very pissed off. It's very confusing and all of that. Now, like Dapo said, what does this mean for startups? First of all, from accounting, forget even what you do as a startup. From an accounting perspective, many startups used to do this. We know ourselves. Let's confess, guys. Right? You're earning 1 million, what's it called, Naira every month, right? You now have a chance to report it to your foreign investors, people in the US, in Delaware, whatever. You're telling them that you divide that 1 million Naira by 400. You tell them that that's what you, or 440, 460. Tell them that that's what you earned. Everybody's happy. It looks okay. Now, that's what you did last year. That's what you probably did in March, in April. Now, from next month, ideally, the accountant here can correct us, but if now this is now the real rate, the market rate, the official rates, based on I&E window, you get technically the currency has devalued, right? So what you're converting that 1 million Naira, let's say you make 1 million Naira again this June or July, you're converting that by maybe 700, 710. That means that same revenue you made last month in dollar terms has almost cut by half. So you're reporting almost half of your revenue to foreign investors. They are scared, because foreign investors don't do all the time. Like, hey, startup, what happened? You guys have, and startups is all about growth.
Yeah.
These guys have dropped the growth rate, the revenue growth, the MRR, the ARR, all of that fancy stuff. And that would definitely hurt valuation. Because you're now saying that before you were a $1 million revenue startup per annum, right? Now you're literally maybe like a $500,000 revenue startup. It looks like you're going backwards. It looks like growth has been hurt significantly. So you're scared. But then a friend of mine, when I put this out there, he messaged me saying, hey, those startups that used to peg the salaries to dollar, they have to increase salaries too. So it's very funny that Shout out to Goldie because he's very much. We're all focused on the other side of revenue, but like
Fact,
the
fact,
expenses too.
fact.
You know, some people let's say they're paying $2,000 per month, and they're converting it at 460 and giving you naira. Hey,
Oh,
hey, hey! You don't start knocking on another hey, boss. The rate has
things
changed.
go things go red, man. Oh boy, things don't red, man.
So from expenses and revenue, they may
Yeah,
be hit, and everybody has to be cautious about it. Every startup, ed tech startup, everybody. It just shows you the game we're in. If you're
yeah,
exposed to currency, you take it as you may. Now, startups may start thinking about more creative ways to hedge currency. Maybe when you raise a dollar, maybe use that as collateral, borrow in naira. I don't know. I don't want to get too risky, but
yeah.
it just shows it's a game. You're exposed to currency, you're exposed to currency, and you have to report to your reporting currency is where you are based legally, which is, I guess, the US for most
Yes,
startups.
yeah.
Then now, what do you do as a startup? How does this, because this friction of the ability to change currency quickly and move currency quickly has always affected many people. You, myself, paying for Netflix in Nigeria, paying for iTunes, all of those things. Just in the past year, the banks said you can't use your Naira card, your Naira Mastercard, or your Naira Verve card to do international transactions again. That hurts many people. So many startups rose to the occasion, and I feel bad because I think a founder put it out there, said, "Look, we startups have been helping you guys solve this friction since, but now that this policy has changed against us, people are celebrating our demise." So it's the game, I guess.
Yeah, the game is the game, brother. The game is the game, man.
Yeah. So guys that used to do like virtual cards, they may become obsolete if they don't change. Meaning that if currency is now moving freely,
Obsolete.
is obsolete. Yeah, exactly. It is. If currency is moving freely, right? A GTB or an Access Bank would just easily say, okay, hey, look, you can keep using your Naira card to transact abroad or whatever, because they want to gain from that. They want to gain on fees and stuff like that. So that removes the need for all those guys that used to do virtual card solutions.
That's
You
a good
get?
point as well. That's a good point. That's a good point.
Yeah, go on. Yeah.
But even the at some point for a while now, even like regular Mastercards and Visa cards, right? Then don't even work for online transactions, right?
Yeah.
Because then again, those guys use the CBN rates, right? They don't use the black market rate, right? And like I said, dollar hasn't been available or it's been in very limited supply. So with this kind of with this floating now, over time, hopefully, since there's no more peg anymore, and once dollar supply increases, then a lot of these cards should start working for online transactions. But yeah, I think that's also a very interesting point.
Yeah. So it is. I think it'll be very interesting to see what happens in the next year. The most important thing is consistency. If CBN has said something, please stick to it. You get, otherwise, people already have a very huge trust deficiency in the economy, right? So let's see what happens. Like I said, like that person said, many investors are on the sidelines because technically, by this news, a US investor is meant to say, "Hey, I have dollars. My dollars is now two times more valuable. In Nigeria. Let me quickly move money there and buy assets, and assets are now decreasing in price."
I kid you not. I kid you not, man. I kid you not, man. Literally last week. Bro, I don't know if I hit your booking, but literally, like, it was always my first go-to if I need a naira. That's my first go-to. But I kid you not, I was trying to convert some dollars to naira, right? This news came out. I said I'm going to wait. Let me wait, man. Let me wait. But yeah, it's a very good point. It's a very even go to the investor side of things, right? We're also talking about this in the sense that, I mean, prior to the float to this news, right? The one concern that investors have had for years is that they would invest in startups, right? There's never a problem if you try to convert your dollars to naira at the CBN rate. They'll give you that, right? But the problem investors have always faced is exiting the investment to converting from naira to dollars, because, to be honest, it's better for you to go through the CBN because it's a lower rate where you get more dollars, right? But the problem is the backlog is ridiculous, right? You're waiting for months, or even over a year to just get your dollar, right? Because, like I said, dollar is limited, right? So a lot of these investors end up having to go through the black market because there's more liquidity there, right? So they end up having to go to the black market to to get the dollars. But it's so like it's so not beneficial for them because you're getting the CBN rate was 462. The black market rate is like 750 or 760, right? So you can see the huge difference, right?
Yeah.
And this is something that investors have clamored about for years. Like this doesn't make sense. So hopefully with this removal of the peg and just floating the currency, at least there'll be more stability. At least everyone knows what that rate is. So if I'm investing, if I'm investing at 770, that's what I'm going to exit as.
More than likely. Yeah, it's like around that range. So and it's very unfair. It's like when I was bringing my dollar, people were happy, you collected it willingly. When I'm not about to come take it out, you said, hey. So it's very,
yeah,
it's very somehow. And let's see how it goes. And hopefully it's a huge change, I believe, in our economy going forward. So it's very interesting times, to be honest.
Yeah.
So look at it.
But yeah, so like I said, I'm over the next couple of months we'll see how that goes. What my final thought on this is, like you said, the government and the CBN should stick to this, right? Because like I said, we already know there's going to be some pain that will come from this in the short term. There's going to be that volatility in the currency. You probably see it go up and come down and go up and down because it's trying to find its equilibrium. It's trying to find the balance, right?
Yeah.
What we have to do, or what the CBN has to do, is stick to that policy, right? Because we know in the long term it's beneficial for the economy, right? I mean, there's no power economy that pegs the dollar. You have to let the market determine what your currency will be, right? So we have to stick to it, like you said. Let's stick to it, right? So yeah, but we kind of figure it will be a deep conversation, anyways. But moving on to the startups that are currently raising funds, right? I know you wanted to talk about that. Temi and what the other one? Is it?
Yeah, Temi and Is it that? Sorry, shout out to Is it people, but like the description on the website, it says the company is Easy. Easy. You know, the ones that always know the language say Easy, but they kept saying like in bracket that it's pronounced easy, so it confuses me, right? I don't know. Let's see. Anyway, so the news came out that two startups this past week have successfully completed their fundraise of a new fundraise round, right? Both Termi and Eze, you get. Termi raised $3.6 million recently, bringing the total raise to $5.4 million. They've been in operation since 2014, and this company is essentially like a digital marketing platform. It helps startups. I like it because it's B2B, so they help startups enhance the customer relationship management, communication with customers, communication with prospective customers as well. So essentially digital marketing, but efficiently, right? So that's what I like about them. What's interesting is that 2014 to now, very long time, but people think Termi is like a young company. So it shows again that it's not all roses. It's tenacity, it's longevity as well, staying in the game that makes you play long term. On the other hand, Easy as they call themselves, is a younger company, fairly new. They recently raised $3.2 million or thereabouts, and allegedly, I would place them more in the seed round stage. It wasn't mentioned what stage they are, but
are these all safes or are they price rounds?
Safes at this point, from last I heard. And Termi was led by the recent round was led by Ventures Platform. Shout out to Ventures Platform. I think we interviewed someone from them before. Then, so with Eze, they are based in Los Angeles. They are more of a B2B, again, another B2B marketplace for electronics. So you think of it like used phones, new phones, all the likes. So the B2B space. And what's interesting about both of them is that they are raising for expansion, but geographic expansion. So Termi is saying that they're trying to focus on Francophone Africa and to establish presence in Francophone Africa. So as Cote d'Ivoire, other Cameroon, other places like that, French-speaking parts of West Africa. That's what they're trying to enter with this new fundraise. Whereas Easy is trying to enter the global markets, US, Canada, UK, all of that. I mean, they are headquartered in Los Angeles. So maybe that was why. So it's interesting how, and we've seen this throughout this year, every company that announced that raise, they're either doing like a Pan-African expansion or a global expansion. And I think it's an interesting trend that maybe we should study more on as far as African startups, and Nigerian startups per se, because we just talked about currency. So these guys are maybe trying to also hedge their currency. I know when the news of this free floats came up, Jason Njoku, founder of Iroko TV, said something interesting. He said, Iroko TV only earns 8% of their revenue in Naira.
Mm.
The rest is in foreign currency, probably USD and pounds, showing that he as an African startup is easily hedged against this. You get only 8% of your revenue is still in Naira. So when this devaluation happens, where that 8% is almost cut in half, it doesn't hurt significantly the bottom line. So I think that's quite interesting. If Jason or if Iroko TV has most of their OPEX, the operation in Nigeria, then it's a very sweet mix where you're earning in dollar, spending in Naira. But I don't know much about his OPEX breakdown. So I thought that was interesting. And maybe that's what these younger startups are trying to hedge against by expanding. I don't know why you're expanding across Africa, but expanding globally, But I mean, we've seen many people do Pan-African, Paga and the like. So maybe there's something there as well and many Nigerian banks. I remember my first time going to Ghana, I saw lots of GTB, Access Bank. It's very surprising. So many Nigerian banks already did that move before. So maybe these guys are following. There's something there in Pan-African expansion. I advocate for it, but I just haven't seen that. I haven't seen emotionally, I want to see Pan-African companies, but I haven't seen the economics behind it. I don't know why they're doing it, but something we should look into more, I think.
I think that's a good point. I think it depends on the sector you're playing in, right? I really think it depends on the you're playing in. So for some sectors, there's probably a huge play for Pan-African expansion, right? So if it's fintech for the most part, there's some kind of need across Africa, right? So it makes sense. Likes of Paga and the rest of them who expanded across the African continent, it made sense why they made that kind of expansion, right? Those who are trying to go global. I've always said, if you're launching a startup in Africa, in Nigeria, and Africa in general, you should have your eyes set on some kind of global expansion, anyways. I mean, especially where we are today, I don't think there's enough moat, enough like meat in Africa. Just sake, you want to be a multi-billion-dollar tech company, but just in Africa right now in the short term, but still a developing nation. So we're still a developing a continent. So you probably have a better chance of reaching that status, not just by mouth, but like actual revenue, if you have some kind of global play to your strategy, right? So then again, I know over the past couple of years, a lot of these startups might have been able to get past that just because, like I said, I mean, it was easier to raise capital. Investors were just looking for where they can put their money and stuff. But now, as things are tightening up, it's kind of like you need to at least show how you're trying to expand globally. Because like I said, like we already know inflation is really high in Nigeria right now. I know I said this last week, I probably say this every week again. Everything that's happening today is pretty much as a reason of what's going on a global scale, right? So at the end of the day, investors really want to see how are you building for the long term. How are you building for the long term? It's not just about pretty much the whole talk of, well, I mean, Nigerian economy is a big market. Nah, that's not good enough anymore. The 200 million plus now is not good enough anymore. Nah, like how are you building? Like how are you building for the world? How are you building past Nigeria? That's what people really want to see now, because it's not just about numbers anymore, right? We already know unemployment is at almost 40 or 50% in Nigeria. So you can't just say we have 200 million. No, it's not enough. Because then again, people are still looking for what to eat, right? So I'm not surprised that a lot of these guys are playing that global play. I don't really know much about this as tell me guys, if it's a B2B platform. Funny enough, I actually spoke with someone about a year or two ago who was actually raising capital for some kind of B2B enterprise. Who was actually the CTO of the startup, and they're looking to raise about 100 or 200K back then for like a pre-seed or angel round, something like that. I'm not really sure where they are today. So, but I find it interesting. I think, funny enough, I think there's a play B2B and use phones and this kind of stuff. There could be a play there because this is a market that has been kind of informal for a long time in Nigeria. We've always had this use. I mean, you talk about computer village and things like that, right? We've always had this informal economy for a while in Nigeria. So if we're trying to formalize it and open it up to the global market, that'll be really interesting because we know we buy our phones at a very low cost in Nigeria. And these are, I mean, besides the one that are questionable, but like for the most part, I mean, you go to Nigeria, I kid you not, you go to Nigeria, I just knows this, country where people are supposedly hustling, people are using iPhones up and down. I don't know how.
Yeah. Mm-hmm.
People are using, I mean, better phones that I use, right? I don't know how, right? But then again, it's because we found a way of really getting these phones, fixing them, or probably getting them imported or at a low, I don't, whatever it is, right? But we have a way of just providing actual iPhones, good quality iPhones at low rates. Now, don't get me wrong, there are people who still buy the iPhones in Nigeria for the actual price, like 500K or 600K Naira, right? But at the same time, there are also people who are able to buy this phone from the likes of Computer Village, fix them up and do this at a low cost. So if that's the kind of play that we're trying to now formalize and open up to the global market as far as used phones or this or that, then I think that's an interesting play. I just thought, but then again, only the numbers really show if we have the supply at such a
Yeah.
scale, right? But moving on to the last one, all right? Or do you have?
No, yeah. So the last thing I wanted to touch on was, yeah. So these two startups that have completed their raise. Right, going forward, we want to try and be giving shout outs to startups that are currently raising, right, on our podcast. So if you're currently raising or you know someone who's currently raising, let's know. We'll check it out, verify, then we'll give you a shout out on our call. As of today, I know of two, Sana Global, the natural health startup, creating like a platform where like an administrative platform for startups for natural health practitioners. So think of it like yoga practitioner, acupuncture practitioners, all the likes, to manage their clients, manage bookings, and have like a whole e-commerce aspect to that. So shout out to them. Then shout out to Paddy Cover. So Paddy Cover, they are the future of insurance, and they're currently fundraising. And interestingly, they're fundraising through WeFunder. So check it out as well if you want to. We may drop the links in the show notes or whatever. So those are the two. But if you're raising, you're currently raising, reach out to us. We don't just want to always be mentioning guys that have already finished. Let's also mention and shout out to guys that are on the road, so that we may also announce when they're finished as well. So you see the whole value chain.
But yeah, okay. So that's fair. That's fair. So like I said, reach out to us. Reach out to us. Last thing I'll talk about is the student loan bill. But earlier this week, the new Nigerian President Tinubu signed a bill into that would provide, I don't know if it's low interest or 0% interest, but pretty much provide loans to students in Nigeria. That would help them further their education, mostly around the university, mostly at the university level, right? So this is something that, funny enough, this is actually something that was that has kind of brought about mixed emotions, because I mean I've been seeing the public's opinion on this, and a lot of people are saying this is just a waste of time. This is just for show that, right? But just looking at some of the details of the bill itself, and I think there are pros and cons to it. So the first one being that, first of all, the headquarters. So pretty much this is going to be like a bank in the sort of be set up for this program, and the headquarters will be in Abuja. But I think the requirement for this is for every state to have a branch of this institution in their own state to make accessibility a lot straightforward for students. Like I said, it's supposed to be some kind of loan that'll be available to students. Apparently, there are also requirements for this, right? Of course, the fact that you have to be admitted to a certain university, you need the signature from the vice chancellor or whatever it is, or from your head of department to actually stamp your letter saying you actually admitted to that school and within that faculty. The family household income cannot be more than 500,000 naira. And I was reading to the bill as well. One thing that I thought was really interesting was they're actually requiring that you have that you actually get a guarantor, right?
Yeah.
To sign on that letter. Now, the guarantor can only be one of two things. I don't know if you saw this. It can only be
Civil servant
it,
at
no,
levels
it can't be a
12 or
civil
higher.
servant that's a grade 12 or L12 or something,
Yeah.
or a lawyer who's practiced for about at least 10 years or something of that sort, right? I thought this was very interesting. I'm like, well, that's very specific. What really is the emotion behind that?
Yeah.
So then again, even going, and I'll let you also dive into this, but even going back in time, kind of like I said, there were mixed emotions about this, right? But going back in time, apparently, like back in the days, I think it was 1980s or so, or 1970s or so. Apparently, like these programs were actually available in the past that a lot of our parents' generations benefited from. Like back in the
Yeah.
day, all of these guys were able to go to college or go to school, whether it was secondary school or university, be able to go to school for free, right? Which is what enabled a lot of low-income households get the degrees in whatever area that they really liked, enable them to get their degree and pretty much further the lifestyle or better themselves post college, right? So that's something that a lot of our parents benefited from that we haven't been able to benefit from. But before I even dive into my own opinion on this, right? Maybe you can shed more light on the actual bill, because I haven't gone through the whole bill in word for word yet, but maybe you can shed some more light on this.
Yeah. I mean, you've done a good job in covering it. The only other aspect is that technically the bill will be officiated by Bank of Education or Education Bank.
Yeah,
That will
something
almost
like
be
that.
the institution that facilitates these loans, right? Then the bill goes hand in hand with another bill, which basically creates tuition for federal universities. Because what people forget is that as of now, federal education in Nigeria is free. Now, if you went to like a University of Lagos, University of Benin, like federal schools, right? You probably paid maybe sporting facility levy, all these kind of random levies, but there was no, in quotes, no tuition fee. So you didn't, it's not as if you went and paid zero, but you paid other things that were levies, but you didn't pay tuition. I think by our constitution or whatever, they're trying to make federal universities free. So now the current administration is saying, look, that is too costly for us. So we're creating tuition. Now schools will now be charging tuition. But side by side, we're also now creating what's it called? A loan program that allows you to borrow from us that will now cancel that tuition. I think, to not my words, I think it's poorly executed. Because you're creating the you're creating the invoice and you're not giving the guy the money to pay for the invoice. Those two could have canceled out in a more tidy way, I think. Right? I agree completely that, I think we spoke about this slightly when we talk about medical sector. I agree completely that education has to be financed another way. The burden of education is too much on the government, and that hurts the quality of education, right? There are many low-income Nigerian households, and I'm not trying to speak from privilege or whatever, but there are many low-income Nigerian households that magically or readily pay double for good schools in Ghana or in Cameroon or the likes, showing that Nigerians will
pay for quality education.
yeah, you value quality. Let's be frank.
We
You
value
value
education.
quality.
Oh
Yeah.
yeah.
So, but that's not a sweet mix, so how can I get it to everybody? I understand that. But I think if there are many smart people in the country, we will sit down and brainstorm on this for another year or so, we can find a better approach to funding education. But I think this current plan is silly, plainly, meaning that, first of all, the loan now, maybe they could have channeled this through banks, commercial banks or whatever, as the people that would assess and appraise and give out the loans. I think that would have been an easier approach. Putting it all through the one education, Bank of Education, already makes it look very, very difficult as far as bureaucracy. Then secondly, if your household is only making 500,000 naira or below, means you're a very low income household, how do you have access to level 12 civil servants? Let's be frank, right? And how do you have access to maybe 10 years lawyer? Let's be frank. Then secondly, why would that lawyer want to vouch for you? If you are anything, because what does that mean? If I'm the lawyer, what does that mean to me if I'm a guarantor? I don't know you from Adam. I'm now, you get. So it now adds another layer of, one, rationally, these guys may not even have access to these people that are meant to guarantee them. But then two, you don't just guarantee anybody, you guarantee people that you're close to. So these guys are likely not close to these people. So how would they even guarantee them? So it's very low chance of it happening. But then secondly, why would you want to do that? This may create a parallel market, meaning all these brief lawyers, you get now using this for a side job, meaning I'll guarantee you must pay me extra, pay me that 500K and I'll guarantee you. You get, so it ends up creating a way for people to make side income that are basically gouging the people. So I don't see how this solves I like the idea in theory, but I think we have to do some more thinking about the practicality of it, right? Then lastly, the job market is so painful. I think another thing in the quote was that after like your NYSC,
2 years, after like a year or two,
yeah,
after like a year or two of graduating, you need to start paying back. I'm like, bruh.
And if you don't pay back, blah 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 blah, you'll be in jail. You know, brother. So you want to incarcerate half of the population.
Bro, I'm like,
and the job market
40%.
Right now, 1 in 3 people are employed. Less than that are gainfully employed. So you're almost feeding them. You're creating a direct pipeline from federal university to prison. You know, you do brief NYSC, then prison. Boom. Very, very
maybe
straight.
that's a better business plan there. That's start building prisons, man. Bro, I mean that was a joke, by the way. That was a joke. But yeah, but I think you're bang on. I think you're bang on in the sense that's really my take to this whole thing. I think within the education system, there are other problems that we're facing. Right? Look at it. Quality of education has dropped. That's why people are paying. They are literally willing to bet their whole house just to send the kids out of the country. Whether it's even Ghana, just right there by our neighbors, right? University of Ghana.
Shout out to Ghana.
Shout out to Ghana, right? Chale. But whether even Ghana, I'm like, people are willing to just bet their arm just to send the kids to Ghana or SA or Egypt or wherever it is, right? Just to give the kids quality education. It doesn't have to be abroad, just somewhere else besides Nigeria, because like I said, we face issues within the education system. The fact that teachers or professors are not even paid, right? Like pretty much the strike that happens almost every year is just due to the fact that teachers are not getting paid. The infrastructure, the facilities, the equipment that we really have within the education system are not just sufficient. They're not adequate. They're not up to par. Right, like these things are not on the scale or level that they need to be at for quality education. These are the things that we need to bring into the system, right, before we start providing 0% interest or whatever it is. The difference between where we are today and where we were 40, 50 years ago is that the Nigerian economy was thriving way better then. Like we had the industrial sector, we had the textile industry, we had the oil industry was booming, we had companies that were in Nigeria building and building and building and building. Since then, a lot of them have left. The textile industry has collapsed, right? The oil sector is pretty much at an all-time, almost if not all-time low right now, right? So at the end of the day, like, we have to understand the fact that Nigeria is not where it used to be before, right? In the sense that back in the day, I mean, the dollar to Naira rate was almost even the same thing, right? So it just shows you how behind we are today. So the laws that always work back then might not necessarily work today. Kind of like you said, right? The execution is really the problem for me with this thing. I think there are other things that should have been addressed. I think for a layman, it sounds very nice or like no interest, but first principles at the core, what is really the problem? And I don't think. I think this is good for eye service. Okay, no interest. But when it comes to this law being executed, I just don't see how it solves the problem. Like you said, there are no jobs in the economy. So at the end of the day, like I don't actually think the truth is Nigerians, we always find a way to educate ourselves. We always find a way to educate ourselves. Whether I give us money, don't give us money. Trust me, we value education way too much.
Too much, yeah.
Right? Value education way too much. Whether it's IT or whether it's project management, or whether it's data analyst, or we educate ourselves. We educate ourselves. And then pretty much the reason why Nigeria is now really thriving as a tech or whatever industry is because the private sector has really come into play and said, you know what, we will find, like, we'll figure a way out of this, right? So we've always found a way to educate ourselves. But the problem is the education we're educating ourselves is for how we can feed and how we can help our own selves, right? And many a times when we do these things, we're finding opportunities outside of Nigeria. Outside of Nigeria. We are doing this data analysis, whatever, right? Like getting jobs outside of Nigeria. We're getting remote jobs, right? Whether it's software engineering with Andelas and the likes of them, we're getting jobs outside of Nigeria because guess what? There are no jobs in Nigeria. So the other day we're talking about this about the healthcare system or the healthcare system, right? The fact that the Nigerian government were trying to pass a law that would restrict medical professionals to stay in the country for at least 5 years before they leave. Why? Because the doctors who were being trained in Nigeria were leaving Nigeria, right? So the problem not the fact that we're not training doctors. The problem is the fact that we are training doctors and they're leaving. I mean, we're looking at the numbers, about 10,000 or 11,000 trained professionals. Sorry, there are about 11 or 10,000 Nigerian trained doctors in the UK, just in the UK, right? So it gives you, to give context of like, we're training these guys, but they're all leaving because there are no opportunities in the country. So how about we focus on deploying more resources and capital to developing these industries and these sectors, right? Before we start providing the low interest loans.
Yeah.
Because you train, because at the end you end up, you send the guys to schools, they would all join the heavy pile of people that already graduated from the same schools that don't have jobs. And when I fall back into that cycle of, now when I have a heavy a heavy national debt, a heavy student loan crisis, and when I'm having all that conversation, how do we now address and solve this?
And those debts will be crippling because if you're graduating with debts, it reduces your view towards entrepreneurship.
Yeah.
It reduces your view towards like even risky jobs or working in startups. You just want to work somewhere very safe. It reduces that. Then secondly, I even think this is a trick because, like you said about first principle, right now the problem is not graduates. We graduate a lot of people every year. Lots of people attend universities already because it's free, it's cheap. So you probably just created this loan program to blindside people from the fact that you're about to sip in tuition and increase the tuition, right? And I think that's a lazy way of deceiving people.
Yeah, exactly. Because that's something similar that happened in the US in the 70s and 70s, 77, 78, right?
Yeah.
Because prior to that, and that's a very good point. Prior to that in the US, right? For people who don't know this, in the US, prior to 1978, tuition was very low because there was pretty much almost no kind of government incentives. There were no loans, there were no federal loans or anything of that sort to for students. So a lot of people were able to, back then a lot of people used to work 1 or 2 jobs or 3 jobs, but guess what, they could actually pay their tuition, right? They actually had a decent standard of living. But in 1978, the federal government passed a law that now provided what we now know as the federal loans for students and the grants and this and that, right? Now, since that law was passed, we've seen tuition spike to a ridiculous level. Why? Guess what? Because when they passed these laws, that not incentivized. What that did now was not made education accessible to a lot of people. And as market demands, I don't know how the market works. When demand is too high, guess what? So when demand is too high and there's limited supply, guess what will happen? Price will go up. Right.
Exactly.
So that's what happened in the US in the sense that tuition went up to crazy level, and that kind of stabilized the demand and supply, right? Now, and that's why I now have the student loan crisis, because guess what? Tuition is now at a ridiculously high standard. A lot of people are getting student loans. They graduate from these schools, they don't even get the degrees that actually justify the loans that they get, and they end up being in this cycle for the rest of their lives. I mean, the people who have to go to that grade student loan. Apparently, I think that's not student loans that even get passed on to your generational debt.
It's funny because you mentioned strike, because imagine somebody takes a loan in year 1, in year 2, they're doing strike for like 2 years. You think that be accruing? Like, hey, bro, calm down.
Exactly. So that's what I'm saying. Like, they need to on the high level to live, and it looks nice. Like, yeah. I mean, let's go to school, but trust me, fundamentally, there are other problems that need to be solved within the education system before you can start rolling out student loans. Actually invest in your education system. Pay teachers, right? Provide the resources that these guys need, right? Invest in investors, right? Right, whether it's science or medical or tech or whatever it is, like invest in these sectors, right? Kind of like India did in the whole IIT space, right? They decided to invest heavily in that infrastructure, and now, I mean, look at India as a tech hub. I mean, everyone is flooding there. So maybe I don't want to jump to conclusion and say, you know what, this is just a waste of time. Maybe this is just the first step. I feel like this is the first step, and I'll give them more grace in the sense that there's going to be a lot of amendments to this bill.
Yeah, because in a way, it has opened up discussion, like we're doing
open
now,
discussion.
Awareness.
This cannot be the final bill because we've kind of read some parts of it. It doesn't even make sense.
This cannot be in Jesus' name.
It cannot be the final bill. So I think there's going to be some amendments within this bill, right? So
hopefully, yeah. And another thing I wanted to quickly shout out to is, in the US here, schools gain funding from two ways, and two major ways, right?
Private and federal, yeah.
Exactly. So from tuition, which can come in like private people paying their tuition, or like government loans, that's tuition, but then endowments as well.
Yeah.
So alumni for the school create an endowment fund, and just a percentage of the fund is used towards operations every year, right? Not like you get not that. So
yeah, I'm done because, bro, like, in Nigeria, we don't have any kind of school spirit to even say want to start endowment funds anymore.
Yes, so I'm playing for that because that's how you can create that outcome in your school, and not just. But some people have done some interesting things. I see people like buying like laptops and all of that for their school. But if let's try and package it more institutionally, right, and that way the fund can outlive and grow and all of that.
I mean, like this whole endowment thing is really a big thing in the US. Like a lot of these schools literally have fund managers. Literally have like talking about the lights. I mean, on the surface level, a lot of people see like Harvard and MIT and
every school, bro.
People like these schools, bro. Like you look like these schools literally have fund managers, people who actually invest in their funds and generate revenue or bring them money on an annual basis, right? So, like like school in the US is no joke, right? Like
it's very institutional, and many mistakes Nigerians do because one time professor was telling me that him and his classmates they bought like 50 computers for their school, and I was like, that is fine, but that's almost a mistake. Because the whole idea of endowment is that the fund should never finish. So maybe if I give you 10M today, the fund manager is like, how can I make sure that 10M lives forever? So I'll only give the school, I'll invest it. Let's say the 10M now makes 5% that year. I'll only give the school part of that 5%, maybe 2.5. So that way, I'll make sure that the 10M becomes a tree that keeps feeding the school. Not that I just give the whole 10M back for one day. So Nigerians donate and support, but like if you keep it more formal, institutional, do it as a fund, and make sure that only the proceeds of the fund is what the school gets.
Yep. But that's a patriotism. That culture of just that sense of ownership for a lot of these schools, right? So like you graduate and there's this sense of responsibility, or there's this sense of responsibility towards your alma mater, in the sense that, this school did this for me, right? Like I gained this from
they have a whole department for it. I remember my school, one guy, his full-time job was alumni relations. This guy, Phil Knight, the Nike guy that gave him Stanford this thing. The guy that was following him followed for like 4 years. So for 4 years, the guy was basically saying how far before his whole.
But like no joke, like there's a reason why like in Nigeria, like I mean universities are you don't say Unsuka this is but like that I don't know the idea behind the name of those universities, but in the US, literally like these universities are named after these people because they actually funded those programs. So like you said, Phil Knight funded Stanford's MBA program. I mean, I've been to Stanford, right? I visited the campus. So I mean, it has this kind of ancient kind of feeling to it. Like it intentionally built that way, right? But Phil Knight actually built the Stanford MBA, or like heavily invested in that program, right?
And $500 million.
Yeah, and that's the same for a lot of this. For a lot of these universities, whether it's Kellogg, Kellogg MBA. Of course, we all know about Kellogg, right? I mean, or what in like a lot of these guys.
UT Medical School by Macadell. MIT's computer program by Schwarzman. It's interesting, but you know what's funny? I was telling this to Babs like in 2015 or whatever. I was telling him, endowment makes sense. I said, yes, sir. I still have beef with Unilag today because of collecting my transcript. So he was saying that even the divorce was
So
a
it was
torture
not even
to
nice. It was not
to
nice.
talk of them
Exactly.
calling.
But at the end of the day, we're not saying that this law doesn't make sense. We're not saying that this law won't be needed. Of course, we all know at the end of the day, like people have benefited from low interest or low cost of education, right? So of course, there's a need for it anywhere. Anywhere there's a need for accessibility to education, right? But at the same time, the quality has to be there first of all.
Yeah.
That's what we're saying, right? So yeah, so we know this is the first step. We know there's going to there would I hope there will be amendments to this bill, and there will be other supporting bills that would actually help shape and strengthen the educational sector before we start worrying about um low low cost of education. But
I'm
yeah,
good.
just to round up, as always, thank you all again for listening. Like Edosa said, if you're a startup, you're looking to really get people to know more about what you're doing, let us know. That's what we're here for. We're here to really educate and enlighten the diaspora and those in the motherland on what's really going on the continent. The future is here. The future is now. Let's get into it, right? So let us know if you have anything to share. At the same time, I'll always say every week, if you want to hop on this podcast, we don't bite. Like you see, maybe we need to be joking more and just show more of our. Trust me, like this one, I don't even take too many things too serious, man. Like we just know how to have a good time. So we're here, like I said, we're here for the listeners. So if you want to hop on this podcast, or if you have any topics that you like us to really dive into, let us know. That's what we're here for. And of course, if you really enjoyed this episode, feel free to like, share, hit the subscribe button. Somewhere here. I don't know where it is, man. But let us know your thoughts. Share with your friends, your family, your network as well. And yep, we'll just go ahead and wrap it up here. It's always a pleasure speaking to you, Edosa, my brother. Thank you again for being flexible and hopping on this week again. We'll do this again next week. But in the meantime, you'll have a good time. Stay blessed. Stay healthy. Thank you.